Hello friends, welcome to Bankers Plus Academy. The Reserve Bank of India has recently issued a circular pertaining to resetting of floating interest rates. It's an important circular, and in this video we are going to discuss the highlights of the guidelines given in the circular, which are meant for banks and other lending institutions. To begin with, this circular is applicable for personal loans. Personal loans normally refer to loans given to individuals like home loans, loans against property, auto loans, microfinance loans, digital loans, and education loans. The new guidelines have been issued by RBI based on customer complaints related to elongation of loan tenure and or increase in EMI for personal loans after each resetting of interest by the lending institutions. We know that floating rate interest rate is fixed by lenders by adding the margin on the benchmark rates like repo rate announced by RBI periodically. So, any cut or increase in rates by RBI gets transmitted to the customers immediately. But there has been lack of transparency on how this is being executed. According to the RBI, several consumer complaints have been received in relation to elongation of loan tenure or increase in EMI amount with regard to EMI based floating rate personal loans without proper communication or consent of the borrowers. As mentioned earlier, the new guidelines are applicable to all personal loans. Remember, when the interest rate on a loan with a floating interest rate goes up, the bank has three options. The first one is increasing the tenor of the loan. Here, you increase the tenor by another 5 or 10 years so that the EMI liability of the customer does not increase. But it must be noted that when the tenor of the loan increases, the borrower ends up paying a lot more for the loan in the end. It will be pinching the borrower more, especially in the case of housing loans, where the repayment period goes even up to 30 years. The next option is to increase the EMI amount, which is a better option if the borrower can afford to pay the increased monthly installment. And now, RBI has asked lenders to provide one more option to the borrowers, that is, shifting to fixed rate option. So, what RBI has now asked REs or regulated entities like banks and financial institutions is to ensure that at the time of sanction of EMI based floating rate personal loans, they have to take into account the repayment capacity of the borrowers to ensure that adequate headroom or margin is available for elongation of tenor and or increase in EMI in the scenario of possible increase in the external benchmark rate during the tenor of the loan. Accordingly, at the time of sanction, lenders have to clearly communicate to the borrowers about the possible impact of change in benchmark interest rate on the loan leading to changes in EMI and or tenor or both. Subsequently, any increase in the EMI or tenor or both on account of the above shall be communicated to the borrower immediately through appropriate channels. This way, RBI is going to address the grievances received from consumers alleging that banks are unilaterally increasing the tenor or EMI amount without informing them. Similarly, at the time of reset of interest rates, lenders should also provide the option to the borrowers to switch over to fixed rate as per their board approved policy. The policy inter alia should also specify the number of times a borrower will be allowed to switch during the tenor of the loan. Another instruction from RBI to the REs is that the borrower should also be given the choice to opt for enhancement in EMI or elongation of tenor or for a combination of both options. Apart from this, the borrower should also be given an option to prepay the loan either in part or in full at any point during the tenor of the loan. All applicable charges for switching of loans from floating to fixed rate and any other service charges or administrative costs incidental to the exercise of the above option should be transparently disclosed in the sanction letter and also at the time of revision of such charges or costs by the REs from time to time. Most importantly, RBI has advised banks that they have to ensure that the elongation of tenor in case of floating rate loan does not result in negative amortization. And what is negative amortization? Negative amortization is a situation where even if you pay the amount you owe, your liability still goes up because you are not paying enough to cover the interest. So, now the lenders will be required to ensure that even in the event of significant rate hikes, the EMIs will continue to cover the monthly interest payments, preventing any increase in the outstanding loan balance from the previous month after the EMI is paid. In other words, it means the entire interest component for a month needs to be part of the EMI and cannot be spilled in the next month and added to the principal. Further, to enhance transparency, the lending institutions need to send or make accessible to the borrowers quarterly statements with the following information: the total principal and interest recovered up to that date, EMI amount, the remaining EMIs, the annualized rate of interest or annual percentage rate or APR for the entire loan duration. So, the lenders have to inform the borrowers the above details on a quarterly basis. The REs, including scheduled commercial banks, NBFCs, and housing finance companies, need to strictly implement the guidelines by 31st December 2023. They also need to inform all existing customers about the guidelines and inform them about the options available to them. So, these are the latest guidelines issued by RBI pertaining to resetting of floating interest rates for personal loans. Thank you.